Welcome to the deep dive. We take interesting sources, pull them apart, and give you the core insights fast.
Yep, cutting through the noise.
Exactly. And today, we're diving into Bitcoin, specifically as a strategic asset. We're looking at it through the eyes of Michael Saylor.
Ah, yes, Saylor. Co-founder, executive chairman of Strategy, formerly MicroStrategy,
And
right?
that's the one. The company that famously went, big on Bitcoin for its corporate treasury.
And you really can't understand his thinking without looking at the bigger picture, economically speaking.
True. We've got, inflation concerns globally, questions about currency losing value.
A sort of growing unease, maybe, with traditional central banking. It definitely creates an environment where people start looking for alternatives.
For sure. So our goal here, our mission for this deep dive, is to really get the strategic thinking behind Strategy's huge Bitcoin bet. Why does Saylor see it as better than, say, gold or just holding dollars?
Okay, so let's start at the beginning. What actually pushed Saylor towards Bitcoin in the first place?
Right, the catalyst.
Well, according to him, it started with a very real problem. Their cash reserves were effectively shrinking, losing purchasing power. He calls it silent inflation.
Okay, so not just an abstract idea, but impacting their bottom line.
Exactly. It forced them to actively search for somewhere else to put that capital, somewhere to preserve its value. They looked at lots of options, apparently.
And landed on Bitcoin. Why?
Because after their analysis, Bitcoin's core features really stood out, specifically its program scarcity that fixed supply and its decentralized structure. They decided it was the most solid option, the best store of value they could find for the long haul.
Interesting. So it wasn't speculation. It was like capital preservation strategy.
That's the argument.
Okay, but, for many people, gold is the safe haven, the traditional store of value when things get shaky. How does Saylor argue Bitcoin is better?
Yeah, and he doesn't dismiss gold entirely, but he views it through almost as technological lens. He sees its limitations in today's world.
Limitations like what?
Physical limitations, mainly. Think about moving large amounts of gold, verifying it's real, storing it securely. It's cumbersome, expensive, logistically challenging.
Okay, fair point.
Whereas Bitcoin, he frames it as digital gold with superpowers.
Superpowers. Okay, tell me more.
Well, think about it. Divisibility, you can divide a Bitcoin into tiny fractions. Portability, you can send it anywhere almost instantly. Verifiability, the blockchain makes it easy to confirm authenticity. And, maybe the biggest one, programmability.
Programmability, meaning you could build things on top of it.
Exactly. Applications, smart contracts, things gold just can't do. It unlocks potential way beyond just sitting there as a store of value.
And that fixed supply point seems crucial too, right? The 21 million coin limit.
Absolutely central. Unlike gold, where, miners could theoretically find a massive new deposit tomorrow and increase the supply.
Bitcoin's supply schedule is fixed, predictable, coded in.
Precisely. That inherent guaranteed scarcity directly counters the fears about inflation and currency devaluation that got him looking in the first place. It's fundamental to his whole case.
Right. Okay, let's tackle the elephant in the room then. Volatility. Bitcoin's price swings are, notorious. Isn't putting so much company money into something that volatile as a game?
Incredibly risky.
It's the number one question, isn't it? And Saylor tackles it head on. His counter is actually quite provocative.
Oh, so?
He argues the real risk, the greater danger over the long term, is not owning Bitcoin.
Wow. Okay, so holding cash or traditional assets is riskier in his view.
In the face of potential currency devaluation, yes. And he makes this pretty bold claim that historically, no one who has bought and held Bitcoin for at least 4 years has actually lost money.
4 years, that's quite specific.
It is. He basically reframes the volatility. He says it's not a bug, it's sort of the price of entry.
The price you pay to get into this new kind of monetary system.
Yeah, the cost for potentially huge long-term upside and for operating outside the old financial rails. That's a strong take. But what about, even if you don't lose money after 4 years, couldn't you have maybe made more money elsewhere during that time? The opportunity cost?
That's a valid point. I think Saylor would likely argue that Bitcoin's potential for fundamental appreciation, driven by that scarcity and network adoption, is so significant that it outweighs those potential short-term opportunity costs.
He sees it as a foundational tech shift, like the internet, where getting in early matters more than short-term swings.
Kind of, yeah. Positioning for the long game, despite the bumpy ride.
What about concentration? You hear concerns that, a few wallets hold a lot of Bitcoin. Does that factor into his risk assessment?
He acknowledges the distribution isn't perfectly even, which, I mean, is maybe typical for a newer asset class.
Yeah.
But his main focus is on the network's decentralization. The fact that no single government or entity controls the protocol itself, that, for him, avoids a bigger risk. The risk of centralized control, manipulation, censorship, things possible in traditional systems.
Okay, so network decentralization trumps concerns about individual holdings concentration, in his view.
Seems to be the case.
Another big critique, energy use. Bitcoin mining uses a lot of electricity. How does he respond to the environmental concerns?
Right, the energy debate. He pushes back on the standard narrative. His perspective is, well, more nuanced.
In what way?
He argues that, first, a lot of Bitcoin mining energy is increasingly coming from renewables, or, interestingly, from stranded or surplus energy sources, energy that wouldn't have been used otherwise.
Like wasted natural gas flares or excess hydropower.
Things like that, yeah. And second, he challenges you to compare it fairly. Don't just look at Bitcoin mining in isolation. Compare its energy footprint to the entire existing global financial system.
You mean banks, ATMs, printing money, armored trucks, clearinghouses, all of it?
All of it, the whole massive infrastructure. He suggests that when you do that full accounting, Bitcoin might actually look surprisingly efficient.
That's definitely a different angle on the energy debate worth thinking about. Now, shifting gears a bit, Saylor also talks to younger people, entrepreneurs. What's his advice there?
Yeah, and it's quite interesting. He doesn't just pitch it as an investment. He talks about Bitcoin as financial sovereignty.
Financial sovereignty, meaning like control over your own assets.
Exactly. Control independence from traditional intermediaries. He really urges young people, innovators, to look past the price charts and study Bitcoin, understand the tech, the principles.
Why is that understanding so important in his view?
Because he believes this technology, this open, decentralized, anti-fragile network, as he calls it.
Anti-fragile, meaning it gets stronger under stress.
Right. He thinks understanding that network is key to unlocking huge innovation potential across basically every industry. For those who get it, the opportunities are immense.
So it's really about education, not just speculation.
Very much so. Learn the fundamentals.
Okay, so as we kind of wrap up this deep dive, what are the main takeaways from Saylor's whole strategic approach to Bitcoin? What's the core message?
I think if you boil it all down, it comes back to a few core beliefs. The power of genuine decentralization, the profound implications of verifiable digital scarcity, and Bitcoin's potential to fundamentally disrupt, maybe even replace, parts of the existing financial order.
So not just an asset, but a potential system shift.
That's how he sees it, yeah.
Yeah.
A fundamental re-architecting. And the implications, well, they're massive. For businesses trying to protect value, governments figuring out the future of money, individuals wanting more control.
It implies that understanding Bitcoin is becoming necessary.
He would argue it's becoming a crucial strategic imperative, not optional anymore, but essential knowledge.
So the really big insight here is Saylor's conviction that Bitcoin isn't just some niche investment or tech play. It's potentially a fundamental change in what money is and how it works.
That's the heart of it.
It definitely leaves you thinking, doesn't it? In a world facing all this economic uncertainty, this constant change, is getting your head around a decentralized, digitally scarce asset like Bitcoin actually becoming a vital skill for, well, for navigating what comes next?
It's a powerful question to chew on.
Indeed. Well, thanks for digging into this with us on The Deep Dive.